Good afternoon, everyone, and welcome to the first Bondora web seminar for investors. We will start with an introduction to Bondora and an overview of the company, as well as insight into the two most important loan processes, underwriting and debt collection. We will finish with the news of the company and news of the future. We have with us today my colleagues, Rein Ojavere, Chief Financial Officer of Bondora, my colleague Tammy Adetola, who is responsible for investor relations, and I am Reelika Vironurm, also responsible for investor relations, both in English and in German. Rein will start by giving you an overview of Bondora as a company, its shareholders, and its processes.
Good afternoon. I'm Rein Ojavere, I'm CFO of the company, and as said, I'll make a short overview of the Bondora. Then we'll have a look at the history, and I also introduce you the management and shareholders. Bondora is a marketplace lending company established already in 2008, which has currently 45 employees and focuses on unsecured consumer lending. Currently, we operate in Finland, Spain, and Estonia. And over the history, we have issued over 85 million worth of loans and processed over 1.5 billion worth of loan applications. What differentiates us from many other players is that in all the markets we operate, we are a licensed credit provider. So it means that in the countries where regulation is required for provision of loans, we are regulated and we are not operating as a marketplace lender in the unregulated field. So therefore we also are fulfilling all the requirements that the license establishes, including AML and responsible lending principles. So to speak shortly about the product, what we do is our product is an unsecured consumer loan. It ranges from 500 to 11,000 euros, with average size currently of around 2,500. The amortization is on a monthly basis and maturity from 3 to 6 years. Currently, the average duration is 47 months, but we are moving towards the range of 3 to 4 years. So the interest rates for the loans are established on risk-based principles, being that we are assessing the customers, estimating the expected loss and the investor return that such risk or class requires, and accordingly are pricing the customers, meaning that we don't have one flat interest rate, as for example banks do, which leads to granting the credit to the customer or then rejecting it. So we believe that we are able to price the loans correctly, so that each and every customer gets the loan and the interest rate what he or she deserves. So in comparison of maybe to other players in the market, one differentiating factor is also definitely return that we have been able to provide to the investors over 8 years. So if you here compare ourselves to the major players in the market that are US companies, Lending Club, which is probably the most known, and also Prosper, then in the same risk classes that we are issuing loans on a comparable basis, we are able to provide for the investors 400,000 basis points or 4 to 10% more return. If you compare ourselves to our European peers, then there the difference is even wider. In Europe, in the continental Europe and in the UK, the average return for the investor from marketplace platforms is in the range of 5 to 7%. This is the average, whereas we are currently providing over 15%, and from recent statistics, we can clearly see that the rates are increasing. So if you now look shortly to the history of Bondora, then as already mentioned, it was established in 2008, whereas the first loans were issued in 2009. So currently we have over 8 years of track record. During that time the company developed fast. We received also several awards on the road, and probably one of the major landmarks there was 2012, when we were the first marketplace that was open to investors across Europe. So we became the first really cross-border platform. So in 2013, we started to expand internationally by launching operations in Finland and Spain and providing credit to customers in those markets. So of course, expansion and product development required additional funds, and in the same year we raised 1.3 million in a seed round from Global Founders Capital, which is an investment vehicle of internet founders. So these are well recognized, well-known German entrepreneurs investing in several online services. In the same year, we also introduced the first fraud detection process and received a interim license from the Financial Supervisor Conduct Authority from the UK. So currently, with all the Brexit and changes happening in that area, we are not continuing with the UK license, but this enabled us to get access to the UK market and improve certainly our profile, which has led to a number of investors from this country. In 2014, we rolled out our first scorecard and risk-based pricing that replaced the previous auction-based bidding process. So since then, all the risks are assessed by a separate model, and customers are assigned their own special risk rating and interest rate. The next milestone there was closing of Series A round in the size of 4.5 billion euros that was led by Underwriting Management, which is a US-based hedge fund who was also one of the first investors in Lending Cloud, probably the most known lending platform that is currently also listed. So we went from there. In 2016 was also a very active year for us. We rolled out the second version of the scorecards and risk-based pricing in order to improve performance of loans, especially in Finland and Spain. We also split our debt service and investor service to separate companies and acquired license from the Estonian Financial Supervisor Authority. In line with this development, we started also issuing loans from our own balance sheet. Then for the investors, one important factor was opening of the API, in that we were one of the first to have an open API for the investors who can use their own investment strategies to purchase loans, whether from the primary or the secondary market. And currently, let me go further with the management and shareholders. So although we have had two major equity rounds along the road, and still almost 80% of the company is owned by the founders and the private investors who joined us in the early phase of development, whereas only 20% is then owned by institutions, particularly those two funds, Underwriting Management and Global Founders Capital. Supervisory board consists of seasoned executives with very long-term successful track record. Our chairman of the board is João Monteiro, who has had over 20 years of track in different executive positions, including Sky Chefs, a subsidiary of Lufthansa, also several management consulting companies, and he's currently executive at Kühne + Nagel, which is the world's largest logistics company based in Switzerland. The second person I would definitely want to point out is Mr. Mike Jotsma, who is a marketing executive from the US with over 40 years of experience. He has had in his career different assignments, especially with credit companies, including Barclays, American Express, Citibank, Chase, and so on. So he has brought us extremely useful experience from such competitive and developed market as the US, and we have implemented his suggestions very successfully. And the third board member is Will Austin, who represents Underwriting Management, and he has primarily investment background. The management board consists currently of the two persons. Bertel Thomberg is the founder and the CEO of the company, and prior to establishing Bondora, he has held regional management position at Cookwell, which is the largest catalog retailer, and later on Halens that bought this particular company. Myself, I'm primarily coming from investment background. I've had several executive positions in investment management, asset management, and just prior to joining Bondora, I was the board member and head of corporate banking of a DNB bank in Estonia, which is a subsidiary of the Norwegian DNB. Of course, management and board are very important, but we can't really be successful without our heads of the technical and marketing teams. So here, I want to point out Mr. Kairo Kraner, a long-term marketing manager who has been working with us for several years, and our chief technology officer is Mr. Tarko Tennisberg, who has been a software architect in several well-known IT companies, including also a 9-year tenure at Microsoft in the US.
We will go further and give you an overview of the underwriting process. As already mentioned, since the launch of operations in 2008, Bondora has processed more than 1.5 billion euro worth of loan applications and issued over 85.1 million euro in loans. So we can claim to have gathered significant experience in credit scoring and borrower data verification. I will shortly introduce the stages of a loan application and its analysis. The underwriting process consists of 6 stages. They are borrower application, borrower identification and fraud detection, data collection and verification. After that, Bondora will apply the risk scoring and develop loan pricing. The final stage then is signing the loan agreement and paying out the funds to the borrower. We have already developed a high level of expertise in the countries we operate in, namely Estonia, Finland and Spain. And we use a proprietary credit scoring database, which also provides insight into customers' behavior. We use all the collected and available data in order to calculate the risk rating. The underwriting process itself is largely performed automatically by Bondora's proprietary IT systems. Processes requiring manual input, which include taking in borrowers' supporting documents and related data entries, are also automated to the greatest extent possible. The underwriters rely on a detailed written underwriting policy and anti-money laundering policy, with both of which are updated regularly. In addition, they have access to extensive documentation on risk scoring and loan pricing processes. We employ an internally developed credit scoring model, using all of the data collected in earlier steps in order to calculate a prospective borrower's risk rating. The exact variables that influence credit risk ratings are determined and adapted as needed through statistical analysis. These may include information, income information, employment records, and credit history, as well as marketing and other non-traditional data. Scorecards are then prepared by Bondora's Consumer Credit Business Unit Scoring and Price Team and signed off by the unit's head of credit risk. Scorecards are regularly evaluated and calibrated. In general, scorecards provide a 1-year forward-looking estimate of the expected loss. That means the proportion of gross interest not received due to loan credit losses. Based on this data, loan applications are assigned a Bondora rating ranging from AA, which is the safest grade, to F and HR, which are the riskiest investment grade ratings. Let's have a look at the different stages of underwriting from the viewpoint of the borrower as well. In the first stage of the loan application, the borrower will have to enter all the data himself, including personal and contact information, socio-demographic background, employment info, income and outstanding liabilities, and of course to provide the supporting documentation. In the next stage, data collection and verification includes the data provided by the borrower, as well as data available in the local credit bureaus, population registries and property registries of each separate country. The customer can either send us the supporting documents such as bank statements and payslips, or have his bank account information verified directly by a third-party provider. We also look at behavioral data from third-party vendors, social networks, or server logs. It is also important to mention that if there have been any previous applications from the same customer, we always compare the current data with the past one as well. The next stage then will be identification and fraud detection. This is where we will first verify the borrower's email and mobile phone number. We check his registered address through the population registry, and the bank account verification will mostly be done through a third-party provider, as already mentioned. We also trust the banks to send us the correct and needed information about the customer as soon as he makes the first payment to identify himself. Under this step, it is important to know that we will look at 3 main points: whether the borrower's income is verified, whether both his income and expenses are verified, and as a third option, if none of them are verified. In the latter case, the risk level will of course be higher for this customer as well. The next step is risk scoring, where we calculate a risk rating using all the collected data. Variables are adapted through statistical analysis, and a scorecard will be calculated. Just to confirm, the scorecard provides a 1-year forward-looking estimate of a loan's expected loss. Next, there will be loan pricing, where a lifetime cash flow model is constructed using the risk scoring results, and the expected return is calculated as well. All this data is used in order to establish a fair interest rate for the borrower. The last stage is then the signing of the loan agreement and issuing and paying out the loan. The loan agreement will be signed by the customer, as well as the standard European Consumer Credit Information Form. After that, the loan will be paid out. It is also important to know that underwriting is managed by a team of highly experienced and skilled professionals and supported by 6 data engineers, one of whom has a PhD in economics, 2 who are PhD candidates, and 3 experienced software engineers. One question that often comes up from our investors is how many loan applications are actually successful. So on average, we can say that only 10% of the loan applications are approved by Bondora. So concerning that, I will also quickly go over the stringent policy rules of Bondora. All borrowers will have to be applicable to these rules. First of all, the borrower has to be a resident of Estonia, Finland, or Spain, and at least 18 years old. The income of the borrower would have to be at least €1,000 netto per month in Finland, €600 net in Spain, and 300 net in Estonia. The loan itself can be a minimum amount of €500 and a maximum amount of €11,000. The aggregate outstanding amount of loans issued by Bondora to the same borrower may also not exceed the €11,000 mark. The loans have a term of not less than 3 months and not more than 60 months, which is 5 years. The loans all have Bondora's internal credit risk rating from AA to HR. Annual percentage rate of the loan at the time of concluding the credit agreement must be less than statutory limits in the specific country. Loans must be paid in monthly installments. And last but not least, the borrower, of course, should have no active delinquencies with local credit bureaus. My colleague Tammy will now continue with an overview of another very important process, debt collection.
And good afternoon once again, everyone, and thank you for joining us. In the next few minutes, I will be taking you through mainly our debt collection process. And during the session, we will also talk about one, the process for handling some exceptional cases in our collection process, and two, the debt servicing costs and when they are deducted. But before we go further, I'd like to mention that we have 8 years track record of steady improvements in our recoveries. This is possible because our collection strategy focuses on time, efficiency, quality, and customer satisfaction. But in overall, our success factors revolves around early initiation of the recovery process, cooperation with local courts and DCAs, as well as execution of court cases through our local partners. And now straight to the collection process. The collection process spans across 200 days, but we will further break this down from the start. We take a proactive measure to send emails and text messages to our borrowers 7 days before the payment date, so as to remind them of the upcoming payment they have to make. And after this, also 24 hours before the payment date, we send another email notification to remind them of the upcoming payment. And if the borrower does not pay on the scheduled date, we then start what we call the in-house collection process. And this process spans just for 7 days, 1 week. And in this period, we send daily email, text message, hard copy letters to them, and also even make automated calls to our borrowers as well. And should the borrowers refuse to pay or contact us during this 1 week, the case is then handed over to the debt collection agency. These are professionals in recovering debts. However, for Finland, we don't hand over the case to the DCA, as we are currently testing a recovery process without the DCA, because we saw that the results are not as good as we have in other loan markets. So the DCA takes on the case until day 60. And if the DCA is unable to recover the debt, the case is then returned to us at Bondora. Then we send emails to notify the borrower that there will be a charge-off and a legal action will be taken if they do not pay within 2 weeks. This additional 2 weeks is a grace period given to the borrowers as a requirement from the legislation. It also enables them to, or gives them more time to try and pay back the loan. After these 2 weeks, if the borrower fails to pay, then an email is sent to notify them of the commencement of a legal action, and we also publish their details with the local credit bureau. And after this, a legal litigation is started in the local court, and this is on the day 75. The court process for Finland takes typically 4 months until a verdict is made. However, for Estonia, it takes around 3 months and 12 months for Spain. It is also very important to note that due to the nature of the business, it could change because of the peculiarity of each of these cases and the country as well. So from day 76 to day 200, this is the period within which the court deals with the case and then reaches a verdict. After this, the court hands over the case to the local bailiff. At this point, the speed of the recovery rests on the assets of the debtor, and these assets should be the marketable ones. The bailiff can either freeze the debtor's account and deduct payment from their accounts to cover the debt. The debtor's assets can also be liquidated by the bailiff, regardless of whether they were initially settled. as collateral or not. Now, this marks the end of the recovery process, but we also understand that in this process, some exceptional cases might come up, which we do also make arrangements for. And I'll quickly go through these exceptional cases. There are three in number. The first one is debt restructuring, followed by bankruptcy, and then followed by debt inheritance. So for debt restructuring, it's a court procedure which is started by the debtor. In the process, the interest owed may be reduced up to the principal amount. Before the restructuring is effected, the debtor has to present all possible facts to the court. As a result, depending on the monthly payment amount possible, the court then decides in which amount and to whom the debtor has to make the payment. And that is for the debt restructuring. And now to the bankruptcy. This is also a court procedure like the first one, but the difference is that the borrower, the bailiff, or the lender can actually initiate this process. So the process might take up to 15 years, depending on the country. During this procedure, the debtor will have to declare every form of income he has. The court will then divide these among lenders, with an exception of the legally required minimum amount for the borrower's living expenses. If this process does not pull through within the maximum stipulated time, then the loan is written off at that point. There is also the possibility that the court decides to write off the debt before the deadline. And lastly, debt inheritance. This only occurs in the demise of the borrower if the borrower dies. In this case, the family of the deceased debtor has the right to inherit or reject the debt. In the case of rejection of the debt, the local government of the deceased debtor takes over the debt, sells off the marketable assets, and then makes payment as much as possible to settle the debt. I would like to also note here that the bankruptcy and debt restructuring are not too common in the three loan markets that we have currently, but we have had these cases, or some of the cases like this some time ago. So that settles for the exceptional cases and the collection process. And lastly, in this session, we will talk about the debt servicing costs, which is also a hot topic for our investors. In general, we do not charge any investing related fees. However, there are costs deducted from the gross cash flow recovered in connection with the servicing of delinquent loans. This costs cover specifically the success fee that are being paid to the debt collection agencies, the state fees, the court fees, fees for the lawyers, and any other related fees. At any stage of the recovery, the debt servicing costs are removed. Going further, in order to keep the deductions as low as possible, the debt servicing cost is calculated based on the amount recovered. The rate of calculation does vary from time to time based on the prevailing market cost. But on the average, the debt servicing cost should be around 35% of the actual repayment. Charges are calculated on the debt incurred, starting from day 8 of loan overdue. And lastly, it's important for us also to know that the debt servicing cost is deducted the same time that the payment is made to your account as an investor with Bondora. As an investor with Bondora as well, you can also see this from your private reports, cash flow, investments list, and the secondary market as well. The information presented to you includes the amount received and the deductions made from each of these loans. And that marks the end of my session. I hope it was informative for you. Thank you for listening.
And now back to Rein, who will talk about the latest news as well as the future plans of Bondora.
Yes, the latest news I hope you have seen. This is also one of our milestones for this year, is the completely new set of information for the investors. It entails completely new statistic sets, graphs, and other quantitative information that is now brought to the more descriptive way. And there is an opportunity for the investors to choose different settings and see their investments from different angles. So far, as long as I'm concerned, it's probably the best user interface there is in the marketplace universe for the investors. And of course, we have many other plans as well for this year. It's one particular product I'd like to point out is the tax efficient structure. As many of our investors from different countries are in very high marginal tax brackets, then we will establish a pooled structure whereby the defaults are netted against the interest income. So that only the net interest will be then paid out, which means that investors need to pay less tax on their interest income. Of course, we have also several other items in the pipeline, both on the investor and borrower side, and development definitely has not stopped.
Thank you. And as the last part of the webinar, we will answer the questions we have received and not yet replied to during the seminar. So the first question, what does Bondora expect will happen to the return of investors when the next recession hits?
Well, luckily enough, we have been operating in recessionary environments in all the countries. So as we started in 2009 from Estonia, and it was the very deepest bottom of the recession there was. And same applies for Finland and Spain, as we entered both of those markets in 2013. So Finland was in the recession from 2012 to 14, and Spain effectively from 2008 to 14. So we have experience in working in recessionary environments, and we have been able to adjust our risk-based pricing in a way that potential increase in delinquencies will not have a significant effect on the returns. But definitely we need to be aware that practically none of the investments in deep recession can't improve return.
Next question we have received. How many employees do you have, and roughly how much money do they earn in comparison to other Estonians?
Yes, we have 45 employees, and as you might imagine, we are employing highly educated and experienced people in the field of IT, data science, and marketing. So our average salary is about 2 times the Estonian average.
Thank you. And I have to add that, of course, we have a very international staff as well, so not just Estonians in our Tallinn office. Next question. How does your balance sheet look like?
So balance sheet has been financed purely by equity, as we have raised 2 rounds. And although we are investing also to credits ourselves, this has also been done purely on equity basis. Definitely, as we are operating marketplace models, our balance sheet can't be comparable to the banks who have hundreds of millions and billions there, but still it's sufficient and healthy to help us to develop. And as we are now also profitable, then our balance sheet will improve further.
What is the political, societal, and legal context of loans with an interest rate of 30% or more?
So here we need to address that the markets are not alike. So in those markets where we operate, the ordinary customer can't get consumer credit from a bank for less than 20% or even more. So that's the context here. In addition, in those markets, besides banks, a lot of the volume is covered by so-called payday lenders who have interest rates in hundreds or even thousands of percents. So here we provide a solution that's fair for the customers. Otherwise, would have to pay excessively for payday lenders, and for prime customers, we are able to offer credits at lower rates than even the banks. So we are standing in between and providing the best solution for everyone. What concerns legal aspects, then in Estonia and Finland, the APR, or the effective cost of the credit, is capped, and our 30+ interest rate on average is well below this cap that has been set legally.
Thank you. Do you cooperate with institutional investors?
Yes, certainly. We have a very wide contact network among institutions. There are several who are already investing with us, namely some funds and family offices. And I see that this year the share of institutions will grow, and we can onboard a couple of new names from the institutional investor universe.
How many investors are able to use the API, the application programming interface?
So API is open. It's open to everyone, so pretty much anybody can use it. But of course, it requires a bit of technical skill, and it's not as easy as utilizing our portfolio manager. But on average, about 6% of the bids are coming through the API, and we have around 300 very active investors using API that are using the system several times even a day. And also the secondary market is significantly determined by API users who have built their own models and picking the loans according to their own requirements.
Thank you. And the last question, do you plan to give out more information on how to use the API in the future?
We have a page, api.bondora.com, that has instructions how to program it, but beyond that, it requires a bit of technical skill that's probably not our field of activity. So, but all the details on how to program it and how to assign the codes, these are provided in this api.bondora.com network site.
Thank you. In case you do have any other questions, you can contact us anytime under the email address investor@bondora.com. We will be glad to reply in Estonian, English, or German. This marks the end of our first web seminar. Thank you everyone for listening, and have a good afternoon.